Jeff here from System Trader Success, and with the new month, we got hammered. If you were long, anyway, the bears took over on June 1st and really pushed the markets down. We'll look at the S&P on the 5-minute chart right here. You can see the massive gap down and the continual downward trend throughout the entire day. This got me wondering on the potential market edge in regards to the first of the month. What I wanted to do was test the bullishness or bearishness of the first of the month. So what I have here is a 5-minute chart, and on a second data stream I have a daily chart, and what I'm going to look for is on the first trading day of a new month I simply want to go long at the open. Obviously today that would have been a losing trade, but we've all heard the market edge of buying the first of the month. At least I've heard that a few times, that the first of every month tends to hold a bullish edge. So what I did is I created a simple trade station strategy called first of the month, and there's a few inputs in here, but let's just focus on the first couple. Okay, what I have in here is this is going to be a month that we're going to test, 1 through 12 for January through December. If you enter a 0, what this means is go ahead and test every month. In other words, take the trade on every month. We're not going to have a stop loss. This isn't a strategy per se. We're just going to use this as a indicator to determine if we can find some type of market edge to take advantage of. The time we have at the open, essentially 5 minutes before the open, and then the exit at the close. So it's simply going to, this regime filter we're not going to look at right now. We'll just focus on the first 4. So what we're going to do is have this go through all the months, and what we're going to do is take a long trade at the first trading day of each of the month at the open and exit at the close. Let's see what that looks like. I'll just pause this. Alright, here's our results here. You can see that this equity graph goes back to 2000, the year 2000, and goes up to June 1st of 2012. You can see you have, well, it's a pretty positive equity curve. It starts out a little choppy here, has a pretty good run up, and then as of late, since really February of 2011, it's in this pretty strong drawdown. So that's kind of interesting. So maybe there's something to this first of the month. When I look at something like this, obviously this isn't tradable per se, but it makes me think, well, what else do we want to look at? Well, the most obvious thing I think to look at is taking a look at the individual months, and that's why I've created this as an input. This is the month to test, and if I go in here and optimize between 1 and 12 in increments of 1, what this is going to do is going to run through and it's going to test current month 1 for January, 2 for February, and so on. And it'll break it down for each individual month. So let me pause this and we'll see what this looks like. Okay, here are our results. Our tests are numbered 1 through 12 in order. And what I'm going to do is highlight the net profit and bring this up as a bar graph. Maybe a little hard for you to see, but what you have from the left-hand side to the right side, we have 12 bar graphs representing each of the months: January, February, March, April, May, and so on. Bars above, obviously, above the 0 line, are profitable months. So you can see January, February, March, and April have shown a historical bias to the long side. Also in here, October shows a strong upside potential. There's one here, July. These months all show, the other months below here obviously are days where we're having a lot of bearish activity. These may be potential areas to short. What is this? That's December, and then June, the month we just experienced. Those are the two strongest months that seem to show bearish activity. So, this is something to keep in mind if you have trading systems that run on those days, whether that's mechanical or discretionary. Stuff like this is to keep in the back of your mind. Could we make a trading system out of this? Perhaps, but right now it's just an interesting observation. Well, what else can we do with this? I always like to jump in with a regime filter. I typically use like a 100-day or a 200-day period moving average against a daily chart to divide the market into a bullish or bearish type mode. So let's do something like that. If we bring up the inputs here, right now I have the regime look back to 0, which that means it's disabled. Let's put a 100-day look back. So what this will do is we're going to take long trades only when the system sees that the daily price is above the 100-day moving average. I'll pause this. I forgot, I want to change this back to 0. So we'll explore this with all the months with our regime filter. Alright, let that run. I'll pause this. Alright, well, we did reduce the trades, but it doesn't look a whole lot better. We peak out here in 2006, and it really hasn't done much since then. Here is the performance report. 1.29, $3,900. It's not a lot to look at. For comparison, here's the performance report, just the baseline, which is just taking every trade without the regime filter, and you get about the same profit factor with a lot more profit. So I'm not sure if the 100 period moving average really changed it. Let's actually explore the regime filter on a very small scale. Now the reason I'm picking a small scale because I actually went up to a 200 period, which I like to use, and that didn't do very well either. So I'm thinking maybe the first of the month is more prone to a very short type of moving average. In other words, it's going to be more reactive to just really how the last 20 or 30 days have behaved. So what I want to do is explore between 10 and 100 in increments of 10. And let's see what this looks like. Again, this is going over all the months, and we're going to optimize the regime filter with a look back period of 10 through 100 in increments of 10. So I'm just going to pause this. Alright, we're back. I'm going to take a look at the bar graph of this, and as I kind of suspected, you can see 10 for some reason doesn't do well at all, but you can see that there's a nice gradual decline as it moves to a higher look back period. We have 20, 30, 40 going up to 100. I understand this may be kind of difficult for you to see the numbers down here. So around 20, that represents about a month's worth of trading when you have 5 trading days per week times roughly 4 weeks per month. But we can see there's a stable region around in here between 20 and 50. And if we just simply take the average of those, that comes out with about 35. So 35 trading days moving average, which gives it, it's a fairly short-term look back on the regime filter. And let's just see what this looks like. Okay, bringing up the equity curve. Okay, we had an equity curve as late as a year ago. This isn't fantastic, but let's look at the, well, that's a lot better. We have a 1.75, and we're making about the same amount of profit against the baseline. Here's the baseline. So we're making about $9,000 with a 1.28 profit factor. I bet the number of trades were cut down a lot. We had 148 and 57% profitable. Let's take a look. Yeah, 82. We're up to almost 60% profitable, $120 per trade. So we did eliminate some of the unprofitable trades, and we're on the right track here. So what's next? Well, if I wanted to test another type of filter, of course we go back to the baseline system. If you're familiar with how I test trading systems, you always test off the baseline. You never stack different filters on top of each other. That's a big curve fitting no-no. The next thing that I would look at is some type of stop loss. Let's revert this back to the baseline system. In other words, we'll remove the regime filter, okay? And we're just going to have our baseline system testing over all the months. But let's test different stop loss. We'll go 100, to 500 in increments of 50. It's just a fixed hard stop loss. Okay, we'll optimize over that. I'm going to pause the video. Okay, this is what the stop values look like. Again, it may be hard for you to see. I apologize. Far left side is 100, and they increment by 50. So 150, 200, 250 stop. And of course, on the y-axis, we have our net profit. You can see an outlier here at 500. Of course, it kind of makes sense in a way that the larger your stop, the more profit you're probably going to make. That's pretty typical. Let's just take between 150 and 450 and call this kind of a stable region. If you take 150 and 450, add them together, get 600, divided by 2 is 300. So if we just put a $300 stop loss in here, what does this look like? Okay, it's calculating. I'm going to pause it while it calculates. Alright, what we have here is an ugly looking equity curve. So to me, we're not going down the right track. This doesn't look good at all. For curiosity's sake, let's look at a low one, like $150. I imagine this would take you out of a lot of trades that could be profitable. But let's see what this looks like. Okay, yeah, kind of jaggedy, where you have long periods of recurring stop getting hit, and then brief periods of new equity highs, as this takes you out of a lot of trades. But at least most of the time it's above zero. Let's look at the opposite end of the spectrum, at a very high, large stop loss. Let's bring this back up. Let's pick our 500. I'll pause the video. And here it is, the equity curve with a $500 stop. So basically what we're seeing is you probably want to give this room. Maybe some type of ATR squared type stop. A large trailing stop may be worth looking into.